always like to start off with some statistics because I know a lot of people like statistics. So as we all see this week, the Dow just kept going up, but then at the same time we kept talking about employment rate is so high, and then the stock market is going up, and there are multiple offers. What is going on? I just pulled this chart like about 45 minutes ago, so it went above 3,000 now. So we thought it would be interesting to take a look at some of the other statistics. One of them, I see a lot of comments these days, chief economists from Freddie Mac, chief economists from First American, or even other companies, they all talk about, they think that the market is going to recover second half of 2020. And then they also talk about housing supply is still low. So the house prices growth is likely to slow, but it's not likely to go negative. And as we just saw earlier, some of our polls, we didn't see anybody answered the accepted price went below asking. So that's quite interesting. And then this one is even more interesting about this article. It says, we're about to see the best economic data we've seen in the history of this country. And this is by a former economic advisor to the Obama administration. So, I don't mean to go political, but it is something that Democrats all of a sudden was like, oh my God, what's going on? So I thought it was interesting because these economists keep changing the way they say it. At first it says V-shaped recovery, then later they say it's U-shaped, then later they say it's W-shaped recovery, and now everybody's starting to seem to be very optimistic. And then now when people ask us, do you think our home prices are going to crash? So here are a couple of things that I think people need to pay attention to. One is that there are a lot of mortgage forbearance being done right now, and most of this mortgage forbearance is actually by FHA, VA, and also Ginnie Mae borrowers. Now, with that said, in our Bay Area, most of our buyers, they're not FHA, VA, or Ginnie Mae borrowers. So that's why we are seeing what we're seeing right now in our housing market in the Bay Area is that we don't see a lot of people, we don't see a lot of prices going down. Instead, we still have a lot of demands. And another thing is that housing prices will crash like 2008, 2009, only if there are a lot of foreclosures. Now, at the time, 2008, 2009, I started my business in 2005, so I went through that period of time. I remembered in the beginning, everybody was like getting a house with no payment down. And then we even had loan that's above 100%, meaning not only you don't need to put down payment, they can give you more money to buy the house. So it became more like a business decision for a lot of people to say like, I'm just gonna let it go. I'm just gonna let it foreclose. And banks, they're not in the business to hold these assets. So they had to sell them at a discount, and it's mass selling. Now, fast forward to 2020, during this pandemic, we'll see that in this chart, you'll see that more than 58.7% of the homeowner have more than 60% equity in their home. If you have that much equity, do you think that people are going to give up on their home that easily? I don't think so. So this is the reason why, even though we have a lot of forbearance that's going on, I don't think that homeowners, after this, the homeowners are going to say, I'm just going to give it up. They're going to try to work it out somehow, some way. And then second thing is that in our area, we don't really see as much of this forbearance.
Helen, just a quick tidbit on the forbearance. I'm in the process of refinancing my own house. And I've been working with a lender I've worked with for years named Tony. He's at B of A, and he shared with me that B of A's rates aren't super competitive right now because they have to protect their margins. And the reason for that is they have 12 million loans in forbearance. So there's 12 million people who are not making their mortgage payments right now, which translates to billions of dollars, right? I don't know what the average mortgage payment is in the United States or wherever their loans are spread across, but take $3,000, times 12 million. That's how much they're not getting every month right now. Right? So pretty staggering. I think obviously once shelter in place lifts and people can go back to work and things get normal again, that number will come way down again. And to your point, I don't think we'll see many of those, at least locally here, fall into the, short sale or foreclosure bucket. I think we're pretty insulated from that here.
Terrell, did you say that you did not see rates being competitive, or did you say you saw rates being competitive?
He was a little bit embarrassed that B of A couldn't be more competitive on their rates relative to other things I'm seeing out there. And he explained it, that's how he explained it. He just said, we're normally really trying to be really competitive on our purchase money, on our refi loans. But with so many loans in forbearance right now, we have to it means we're going to miss out on some loans, but the ones we get will be profitable kind of thing.
I think it may be lender specific, because I was talking to a lender. I was talking to Citibank, and their rates are amazing. 2.68 on a 10-1 arm, or 2.7, I think it was, and right around 3 for a 30-year. So I'm going to refinance my properties as well. What I do think is happening is that I don't know if you saw, but Jamie Dimon, who's the CEO of JP Morgan, he pretty much said yesterday that the bottom is in. You're going to see a fairly rapid recovery, and he's kind of the guy that everybody listens to on Wall Street. He initially, when this whole COVID thing happened, and he's a very conservative-minded guy. I don't know if you remember, but in 2009, he was snapping up banks left and right that were going under for pennies on the dollar. And so, when he said that, that's when you saw the market run this week, and even today. If you follow the banking stocks, they're going crazy. So I think that the market is now saying that the bottom is in. Now, that doesn't necessarily mean the economy is going to recover, but the market, which projects a year, 2 years out of where the U.S. economy is going to be, is saying that the bottom is in. And so, I communicate with Helen, and I was like, hey, find me a deal, but there's no deals because everybody is looking for a deal, right? Like, so that's the thing. So if you don't see, deals happening, that means people are not selling, or they're just, there's enough of a market demand to, prices aren't getting pushed lower. And I see this happening in other areas as well. So, Bay Area is unique, but in LA, it's something very similar. Because I was looking in LA, I was like, okay, maybe not in the Bay Area, maybe find some premium property in LA, Santa Monica, San Diego, Newport. Same thing, man. Things are closing very quickly. So I'm kind of upset that, I think you may have gotten a good deal in March, I suspect, if somebody was kind of quick to action, but it's, I think the market's now kind of caught on, unless you see a second wave that's devastating. It's, I think you're going to see a fairly strong rebound in Q3, Q4.
Yeah, I think I really agree with that. If we look at, because everybody was really worried about the unemployment, if you look at this chart from the US Bureau of Labor Statistics, it's showing that unemployment is actually mostly our teenagers, and they are not really the home buyers demographic. So that's probably explain a little bit also why, it's not really affecting that much on the housing market. And then you see that over here is saying that temporarily, not having job or applying for employment, they are temporary for 90% of them, and then 10% are permanent. So I think once the economy open up, hopefully a lot of people will be employed afterwards. And then this is the one that you were talking with JP Morgan, and this is from 4 banking institutions. They all, besides Wells Fargo, they expect that the recovery is going to be in fourth quarter, but everyone else thinking that the recovery is going to start second half of the year, which is starting next week. But we have already started seeing the housing market has been improving. By looking at this chart, I just pulled this. This is up till yesterday, and you see that the new sold versus the canceled and withdrawn. And of course, this is when the shelter in place starts, and you see a bunch of these withdrawn listings out, but then you see that it's starting to tail off. But what's interesting is that once we know that May 4th is the day that we can show all type of properties, no open houses, we can just show like vacant and occupied homes. You see end of April started a huge jump on the new listings, came back onto the market, and it just kept coming up. And then also here, this is one that talking about the listing changing to contingent and pending, meaning people actually making offers. You see that this is kept going up again right after May 4th. It has huge jump on the offers going in and become pending. Now, one of the biggest questions a lot of people ask is that, hey, right now Facebook, Apple, Twitter, they all talk about you can work remotely. So does it mean that a lot of people are leaving San Francisco or the Bay Area to work in another state? It's like not in California. So will that affect the housing market over here? I think this is one of the questions I definitely want to ask you guys. I do have my own opinion. I have heard a lot of our buyers what they're thinking, but I definitely would like to talk about this in a little bit. So with that said, I want to go back to our poll first. Are you guys able to see the poll?
No, we can see the slide that has the quote of the week.
Oh, sure. How about we just go through the quote of the week first?
Okay.
This quote, it says, the only limit to our realization of tomorrow will be our doubts of today. That's kind of what it was happening. A lot of people, let's say in 2008 to 2012, if they didn't buy anything at that time, they're going to come on and say like, oh, why didn't I buy anything? Because they had doubts at the time. And then same thing in March. We've seen this over and over again, actually, for a lot of home buyers. And I think one of the reasons why some of you on the panels have been very successful in the real estate market is because you didn't really let your doubts hold you back. So I thought this is quite interesting. I'm going to stop sharing for a little bit. I want to introduce our panel, but before I introduce the panel, I'm ending this poll, and I want everybody to see this. So I want to ask that, what do you see on the current Bay Area housing market from your experience? Most people said that they see lots of showings with multiple offers. The next one was like listings stay on the market for over 2 weeks. Actually, there were 35% seeing that this stayed on the market for over 2 weeks. But next one, 24% is less than 2 weeks. And then we don't really see that it says lots of showings but very few offers. There are 24% of people saying buyers make offers from virtual tour, and 35% say they won't make an offer until they see the property in person, which I think makes sense. The second question is that what do you see from accepted price versus asking price? Most people see that accepted price is right around asking. And the next highest is accepted price is slightly above asking. And then some said very few is like way above asking, kind of like in the beginning of the year before shelter in place. But accepted price is way below asking. We have 2 and 1 is slightly below. So you see the majority is still at or above asking. So thank you so much for sharing your result with us.